What is going on, everybody? It is me, attorney Hadi Harp, and this is an edition of Business Planning TV. Today, I want to talk about pass through business entities, namely a partnership, an S corporation, and usually that's going to be operated through an LLC. So you have an LLC with a few business partners. You guys are operating either as a partnership or as an S corporation for tax purposes. And one thing I think that is critical to understand is the idea of income allocation versus distributions. So when you have a pass through entity and you have profits, the business entity itself does not pay tax on the profits or losses. Okay, instead, those profits or losses get passed through to the owners of the LLC, in this case, you and your business partners. So if the LLC has made $100,000 in this past year, and each of you own, let's say, 25% of the LLC between four of you, each of you will have a K1 that says $25,000 in income was allocated to partner A, 25,000 to partner B, and so on and so forth. Now, what's interesting is that not a lot of people understand that just because you have income does not also mean that you have a distribution. A distribution is when money from the LLC gets paid out, gets distributed to the partners. And it's typically a separate part of the operating agreement. You have one part of the operating agreement that says, here's how profits and losses are going to be allocated. Typically, it's going to follow your percentage interest or ownership interest in the LLC. So if you own 25%, profits and losses, typically the default rule is that profits and losses are going to follow you 25%. Now, separately, typically underneath that in an operating agreement is distributions. Distributions is what happens when we have this money? Do we have to pay out the $25,000 each year? Uh, is it going to be a vote of the members? Is it going to be determined by one of the members or the controlling members? Is it going to be managed by a manager managed LLC? And is it going to be controlled by the manager? Who's making these decisions? That's really important inside of an operating agreement because distributions is going to dictate whether or not any cash actually goes to you. And that's important because you can have a situation where you're expecting to pay income tax on this $25,000, but you had not received that $25,000. And for some people, they didn't even have the additional cash to pay the tax on that $25,000. So keep that in mind when you are operating and building a partnership and talking about issues with your business partners so that you have a clear understanding of where you guys are going to land on this issue. I know for me, a lot of my operating agreements, as a default, I typically include at a minimum, at a minimum, there's going to be distributions equal to cover the tax amount that needs to be paid by the members. So in the example again, you guys made $100,000. You guys are each being allocated income and profit of $25,000. But again, because that doesn't mean the LLC is handing out $25,000, because that's a separate issue, there could be any number of reasons why there's no distributions. Maybe you guys are reinvesting that money into um, a new building or equipment or for a rainy day or to build up your marketing. There can be any number of reasons why distributions don't happen. But getting back to my operating agreements, I typically include something that says, at a minimum, we're going to distribute enough money to the partners to cover what their tax liabilities are going to be for that income allocation. So if the $25,000 hypothetically is going to lead to approximately $5,000 to $7,000 in income, then at a minimum, the LLC should distribute $5,000 to $7,000 to each partner so that they can cover the tax liability on that allocated income. So, big takeaway here, inside of a pass through entity, there are profit and loss allocations, and separately, there are distributions. Those are going to be governed by different terms inside the operating agreement. Keep that in mind next time you jump into business with someone. Thank you. I appreciate you. If you have any questions or comments, you, of course, know how to reach me. Take care.